Okay, good afternoon, everybody. Welcome to the weekly Take on the Market. Today's Friday, March 7th. It's about 1:45 Pacific Standard Time. Market's been closed for a little bit. I will be your host. My name is Scott St. Clair. I'm the manager here at InvestorBiz Daily of our premium products. Take a moment to read the disclaimer, please. I'm not licensed. All right, so we'll jump in. We'll jump into the indices. I didn't do a video last week, and the market obviously has been super dynamic. So I have quite a few screenshots. So we'll do market indices. We're going to skip the industry groups, stocks to watch, and then the quote of the week. So a couple of podcasts or YouTube videos or stuff like that that I've saw in most recent weeks. Stevie Cohen, one of the great hedge fund managers, actually pretty negative for the first time in a while. Paul Singer, who has been a long time hedge fund manager, sees the market just about as risky as he's ever seen. Jeremy Grantham said U.S. stocks are about to be crushed. So there's a lot of headlines that are frightening, for lack of a better term, especially if you're new to the market, because these are very credible, highly sophisticated investors, lots of zeros behind their name. I would guess that. Well, I know Stevie's a billionaire. Paul Singer, I believe, is a billionaire, and Jeremy Grantham, if he ain't a billionaire, he's as close as you'd ever want to be. So these guys have made a ton of money in the market, and they're highly respected. And so people listen to them, and I think that can sway, especially individual investors. Um, I sort of, conceptually or on a macro framework, I agree with them, but I'll tell you that trading the macro is probably the hardest thing you could ever do. You really want to just trade the micro, trade what's in front of you. What's the market doing today? What's it doing for the week? What's it doing for the month, maybe? But you start thinking out like, oh, I think the market's going to be here in December 2027. I just think you're just going to be pretty unhappy with the results when you do that, based on my experience. So the I guess I should have jumped to the AI numbers. I'm going to go out of order a little bit because uh, yeah. So maybe all of these headlines are influencing the individual investors. So you had a spike, a seventh highest spike in bearish sentiment, AAII numbers. And you can see all the other times. And what's different about this spike is how far off the bottom, I'm sorry, how far off the all-time highs the market is when you get that bearishness. So normally the bearishness comes in at the lows. Now, maybe this is some kind of intermediate or short-term low. That's possible, but it's highly unusual for you to get this kind of bearishness so close to all-time highs. So it's very interesting time period. Here's that same kind of chart. You can see the great financial crisis had that type of bearishness, the COVID bust, and then currently. Now, you can see the great financial crisis. It's very interesting. In October 2008, you had a spike in this sentiment. And even though maybe the market did rally, ultimately it went a lot lower. So were they right to be bearish? I guess in the intermediate to longer term. In the shorter term, I think the market did rally. So maybe that's kind of the scenario that you have here. Very interesting. These are the numbers. I didn't realize they were on the previous chart. So the March 2009 minus 50%, then the spike 39.25, and then here we are -3. So let me go back to this earnings reaction. So companies that are beating estimates versus companies that are missing estimates. And what this says is that you're not really getting rewarded for beating, but boy, you can get really hammered for missing. So that creates quite a risky environment, especially through earnings. Okay, NASDAQ 100 during the dot-com bust, because right or wrong, this market feels very similar to the 2000 top to me. I don't know if it's going to play out exactly like that, but I have to admit that it feels similar. A long bull market, big moves in stocks, retail participation, speculative mania, for lack of a better word. I don't know, like maybe Bitcoin is real, but fart coin, come on, that type of stuff. So, and you can see these are some of the biggest days in NASDAQ history, single biggest move days. 13 of the 20 biggest days on the NASDAQ 100 occurred in this 2-year period. You can see those green arrows. So really big days are usually counter trend rallies. So, I mean, gosh, it's market up 9%, 11%, 10%. It's very tempting to want to get into those type of days, but usually it's not a good sign. So for if the rally's going to ever continue, we want power, but if there's just some kind of silly, unusual power up 5, 6, 7% in one day or something, it's probably a sign that we're in a bear market. So keep that in mind as far as how the market does going forward. Consumer confidence. This is very interesting too. Normally, you want to buy the stock market when consumer confidence is very low. Why does consumer confidence get low? Well, usually because the market's going down, jobs are harder to find, people are being laid off, and it's a chicken and egg thing, but that leads to less confidence and eventually a bottom, right? So because of the cycle. But here we are, the market, not that far off the highs, at least when I printed this chart. Now it's gotten a lot worse, but when I printed this chart a handful of days ago, I think we were only, 3 or 4% off the highs. All right, so let's jump to the industry groups. I'm sorry, not the industry groups, the indices. So let's go to the S&P. Oh, we got a little bit of support today off the 200-day, closed above it. A little bit of volume came in, and this is what we would call, from an orthodox style of the investing style on market timing, day one of an attempted follow-through day. So this is just the first day, and you keep counting the days unless we undercut this low. If at any time you go below this low, even if it's only for a moment, then the count would start over. So this is day one, and in a perfect world, go sideways 2, 3, 4, 5, 6, 7, 8, and then boom, like a big day. That would be a follow through day. Now, the problem with a follow through day in the next 5, 6, 8, 9 day window, at least in my estimation, the way I analyze the market is there's no leadership, there's no bases on the U.S. market. There is some leadership, and there are some stocks acting well outside the U.S., but on the U.S. side. So I wouldn't, as crazy as it sounds, I really hope we don't get a follow through day that quick. I'd like to get a little bit more sideways to down and allow the stocks to build bases. And that's the best thing for the market, is that's what gives you these cups with handles, these double bottoms, is market weakness, because they take down everything. And then when they're finally a little bit more confident, the institutions in the market, they run to their favorite names, and that causes them to go up the right side and build, the cups with handles. So they'll go down, but then boom, they run up. So let me just give you kind of these are some perfect examples from history. I'm going to go to the weekly, and I'm going to put the index across the top. So here's Costco. This stock went up probably 100-fold or more from this point. So this is a fantastic, amazing leader. Stock, doubles from there to there. But then the market corrects. And what happens? It goes down. And then the market starts to come back a little bit. And what happens to Costco? Boom. It goes back all the way to the highs, whereas the market did not, right? You see that? And that's how strong the company was, how strong the stock was. And then you get a little bit of a correction and allowed Costco to go sideways, build like a quasi handle there. And your tell is the RS line. That's your tell. And then when the market finally starts to go, this one takes off and runs and doubles again. So somewhere in there is a follow through day, and Costco would have been your go-to stock, or maybe Microsoft. Same thing, right? Stock goes 26 to 60 or 80, more than doubles. Really wants to go higher, coming out of a flat base, probably going higher. But what happens? Market gets hit, so they take it down. But then the market rallies just a little bit, and what happens? They take it back almost to all-time highs, and then you get a little bit of a handle. And what, just like Costco, what's so great about this handle is look at the S&P. This isn't drawn to scale. I would guess that's like 3%ish, something like that, maybe a little bit more. And what does Microsoft do? Builds a 3 weeks tight. So, I mean, obviously in hindsight, it's so much easier, but it's just like you just build these models into your brain and you see that. So, and then once the market is lifted, boom, off to the races. I mean, how far did Microsoft go from that, right? Went up, built another base, got a little tougher, but it held all, maybe you got shaken out somewhere in here, but then coming out of base, you buy it again and runs up, and and you buy it again and it runs up, and or if you're more of a long-term holder, you just keep it. Microsoft at 30 or whatever, and now it's 80 on its way to 800. So that's what even though it's no fun, these market corrections, they're really necessary. It allows you to see where the best merchandise is, the stuff that doesn't want to go down, or it goes down reluctantly is probably the best way to put it. So let's go to the NASDAQ. Same thing, day one, and as long as we hold this low, it's still day one. And let's see. Now, again, I just don't see a lot of merchandise to buy outside or inside the US, I should say. So, and it's the markets are, a bit of a seesaw. So like, are Chinese stocks going to rally because the US market rallies? Maybe they actually stop going up, or I don't know. But if the US market gets real bad, it's hard to think that Chinese stocks can go up in the face of that. Maybe they go down reluctantly, but I have a hard time seeing it. Oh, they're going to go up in that environment. So it's kind of hard to know exactly how to be positioned. So I'm lightly positioned. I don't like to get completely out. That's just me. That might not be for everybody. You're welcome to go all to cash. I have no problem with it. I used to go to all to cash. And the problem for me when I went to all to cash is I'd go play golf and just kind of lose sight. And it took me a while to get the feel back from the market. So I don't like to go to all to cash. That's just for me. To each their own. To each their own. I don't have all the answers, believe me. So NASDAQ, the Dow. It didn't go up as much, so therefore it didn't go down as much. I don't know what to make of the Dow. It's the first time I looked at the Dow in 2 weeks. I usually only look at these when I do the videos, and like the Russell day one, but terrible index, not my favorite. I don't watch that at all. So gold, turn off the pattern right for gold. So I mean, acting really, really well. Hard to argue with that action. Silver, I bet this is a cup with handle. Yeah, I mean, that looks like a really good cup with handle. Huh. Interesting. I'm gonna draw a trend line there just to be aware. Bitcoin, tired. Does it look broken? I don't know. It's between the moving averages, but definitely looks tired. And then, I don't know what's the ETF for like Europe, but like I guess the US Global Europe, I don't know what this is. I've never seen that ticker before. Here's a European Equity Fund, ETF. So Europe has done really, really well. And then of course China has done really, really well. So maybe the seesaw, which was so heavily weighted towards the US, is seesawing the other way, slowly but surely. It's possible. I think Europe is up, China is up. I saw a Substack where they're talking about that, and the U.S. is down. First time in a long, long time you've kind of had that type of different performance. Okay, I think that should do it as far as the indexes. So, if invested, you probably want to be super, super lightly invested. If you like to be short, I don't know. To me, the heart's out of the melon on the short side. I have a single short, which is Tesla, in an ETF. Um, and I don't know. I feel like I'm really pressing my luck by not covering it, but it just never goes up. Knock on wood. It's gotten hammered so bad, but it's not a big position, and it's one of those double inverse ETFs, so it just kind of bleeds. As long as Tesla doesn't rip up, it's going to bleed to death. But I'm open to the fact that it's a bit long in the tooth. I mean, Tesla's down 50%. Oh my gosh, down 46%. Risk happens fast. I mean, here it's, they're building robots and flying cars and robo taxis all over the world. And 7 weeks later, stock's in half. You got to have a plan. I don't know how else to emphasize that. I don't care where you own a stock. You got to have some kind of plan. For me, anyways, 50% is just too much to give back, in my humble estimation. No matter how much you're up on a stock, if you turn 100 grand into $1 million in Tesla, and then you turn $1 million into 500,000, I don't know. I just think psychologically it's not only the money, but it's psychologically you're going to be set back a lot from doing that. So keep that in mind. Okay, so I guess we can jump to, let me go back to my slides. I think we can jump to stocks, right? Yeah. And there's a lot. So let's start with like some of the leaders. Turn the index. So Palantir, I don't want to say that I knew this was going to happen, but to me it was, there's famous Wall Street saying, trees don't grow to the sky. And at some point, they kind of fall by their own weight. And so this was inevitable, I think. Let me see if I can find. I think I sent myself a screenshot of somebody around here, somewhere in here. Somebody that I follow on Twitter had a chart of Palantir and said life changer. They had put on the chart. They had put on the chart life-changing stock or something like that, and I just thought, it's time. That's the time. So big move. Now, can it go up a bunch more from here? Sure, it can. But this is, at best, this is the left side of a base. And when they come off that hard, that fast, the way it does that, they need a lot of time sideways. So this just looks like, at best, a base builder. App, same thing, but much worse. Much worse. Totally broken. This probably is not a leader anymore with that kind of action. That's my 2 cents. NVIDIA. So hanging by a thread, second week. This is the first time in what's that, 3 years that you've got 2 weekly closes below the 40-week line. So to me, it's game over for NVIDIA. It's the earnings and sales are so strong. I don't think it's going to fall apart like a Palantir or a app, but I I think I've said a bunch of times that this is a market perform at best. And it looks like it might even be a market underperform. What's the market off? The Nasdaq's off 10% roughly, and Nvidia's off 26%. Right out of Bill's book, right? What do growth stocks correct? 1.5 to 2.5 times the market. So Palantir, Avago tried to it had a weird day. So in the pre-market, it was up, or last night it was around 210, 212, something way up here. And then it just couldn't open all that well. I think it opened around 195. I don't think that's right. I don't remember it being that high because I actually shorted Avago in the pre-market. So anyways, so it opened, went down, then came back. Oh wait, I apologize. This is the day right here. Maybe I'm confusing the whole day. So I think it opened here, went down, and then came back. So, but just coming off the 200 days, great quarter. Again, great company. Looks a little tired for sure. What else do we have out there? Oops. So Hood. So I thought this was like a go-to maybe leader stock, and it still could be, although it's not a great weekly chart. I have to admit, I don't love the weekly. I think the daily looks a little bit better. You've got some undercuts, try to go up, undercut, try to go up, undercut. Maybe third wave's the charm. But I actually bought the stock here on Friday. And basically, to be honest with you, because I didn't think the market was that bad at that moment, and there was a lot of negative sentiment. So wrongly, let's go back. Let's go to that day that I bought that. Yeah. So I bought that, the market was doing this. The sentiment was really bad. Market touched the 200-day, had a nice, kind of hammer close, and I bought Hood. Because it held the 50-day better, and some of the others didn't. And I talked about it on IB Live on the very next day on Monday, and it kind of got washed up in the wave of the Bitcoin thing, and the stock opened at like 54 or something like that on the news, and I sold it because that's what I do. I mean, I paid 49 for it or something, and it's 54, and because I use size. Right or wrong, sometimes I just get kind of influenced by the money. I go to bed with a net worth of X, and I wake up with a net worth of Y. What did Baba do that day as well? My other huge position. I don't 228. Maybe it did nothing. Yeah, it didn't do a whole lot. But so that's not the right trade for everybody. I mentioned on IB Live, and David Ryan said, "Hey, you guys shouldn't be doing that." He didn't agree with my trade. It's fine. I agree with his analysis. It's not for everybody, but it is for me. So no apologies. I'm going to take a trade like that. I'm going to take the risk. I know where I might be wrong, and if I have 3 stocks and one of them is Hood with a 10-15% position, and it's not going to kill me. I always think about the math. Like if you have a 10-15% position and it opens down 10% for some unusual reason, your whole account, barring the other positions, is going to be down 1.5%. If you have 15% positions, down 10%. So if you're up 25% for the year, to me, that's a risk you can take if you like that name. I didn't know that the whole, Trump crypto thing was coming, and no clue. I just was reading the chart, felt like it was acting like a leader, felt like there's a chance the market was trying to put in some type of short-term bottom. I was wrong on that. I was wrong on Hood, but I got lucky. And sometimes you make money on bad trades, and sometimes um, you lose money on good trades. So I know a few people reached out to me about the trade because of the I mentioned it, and David said it was. I don't know exactly what David said. Something about it not being the right trade for everybody or whatever, and that's fine. It's fine. It doesn't, I don't disagree with him. It is not the right trade for everybody. That's something that I will do, but I like to be transparent on the show and on these videos, and so I'm going to tell you what I did. And so you can say, one guy said in the chat, he said, anybody with half a brain can see that Hood is going to go up a ton from here or something like that. And I think the implication was, I was reading that as that I shouldn't sell it. If you have half a brain, Scott, you wouldn't sell it. Hood's going to the moon. And maybe that person is right. Maybe it is going to the moon. But I guarantee you, if I don't get out at 54 like I did there, I'm going to be out at 50. And if I don't get out at 50, I'm going to be out at 48. And if I don't get out at 48, I'm going to be puking my guts up at 46. So I'm going to turn a winning trade into a losing trade. And that's a big hole that I don't want to dig myself out of. So a few of you asked me about that trade. And so that's kind of why I went down this rabbit hole for whatever that's worth. All right, let's move on. Did Avago. So C Limited, or I keep calling it C Limited. I know it's just C. So very good report. Look at that quarter. It's a really strong quarter. The thing about C that I wish there was some sponsorships. I can't find any of my favorite hedge funds that have a position. None of my favorite mutual funds have a position. So that bothers me a little bit, which is why I don't quite have the same conviction that I used to have with the name. And again, having a good start to the year, thanks to the Chinese stocks. I think that this is the same kind of thing as Hood. That looks like a buy to me, right? So comes out with earnings. Let's go to the intraday chart. And I think it was this day. Yeah. So it gapped up on the earnings, started to go. Market's pretty weak. It came in, and then it started to rally again. So then I bought it. So that all happened within a few hours. And the next day, the stock is up, on 3.5, the stock is roaring. It's up 10%. Now, did I buy it to sell it the same day on 3.5? Is it? Yeah. So no, I didn't buy it on one day to sell it the next, but it's up 10%. I don't quite have the same conviction as I do for BABA, and my second would be Futu, and so C was kind of a third. And I had three stocks up 10%. BABA, Futu, 13%, and C Limited. So again, into the money thing. It was one of my best days in a while, raw money wise. I'm going to take it. I just believe it, when the market gives you a gift, sometimes you got to take it. So I got out of C Limited. I still have the BABA. I still have the Futu, not quite the same position size as those, but I'm trying to be more patient with those, try to give them more room to breathe. So then I thought about buying C back today, but I didn't. But it's acting great. So if you're in that one, it's acting great. But again, this is my 2 cents on how I would handle something like that. All right, so let's get into some of the I think I already did the Tesla, Nvidia, Microsoft. Just looks tired. Amazon, tired. Google, tired. Apple. So Apple's interesting that it's not going down. Look at the relative strength. Look how it's really improved. So I don't know. I don't know why I don't go to Apple. I think Apple is a short, but I don't think the stock is acting like a short. So I don't do anything with Apple. So, and then the FANG stocks, which is, oh, they changed the symbol, FANG A. This is my favorite thing to short when I want to be short. I mean, 690 down to 400 that's a little bit hard out of the melon. I'm not shorted anymore. I'm in a perfect world, that would happen. Somewhere around 550, they would meet, and then I would get short again in a perfect world. I did hear some people on IBD Live like talking about it, just go off tangent a little bit about shorting. Somebody was talking about shorting Palantir this morning when the stock was, at the lows. You don't want to short in the hole. You don't want to short. When the stock is like, I mean, it's down 35%. At that moment, I remember pulling up the chart and it was down 35%. That's not how you short. It's down 35% in 3 weeks. You don't start shorting then. You down 35% in 3 weeks and then it rallies. That's how you short it. Or if you want some weakness, it rallies and then starts to roll over. That's how you short it. So again, you want to go and look at previous ones. So here's Tesla. Breaks really bad. Everybody wants to short it. What happens? They run them in. They jam it from 320 to 360. And so then it's so weak. Ideally, I was looking for it to get here, but it's so weak it couldn't. So that's how you short it. Now, maybe you don't short it here. If you're looking for some kind of confirmation, maybe you short it there. And then you catch that next wave down. So I'm looking for a wave up, and then you can maybe catch the next wave down. But you really don't want to short into extreme weakness. I just don't think that's going. My experience is you'll be unhappy with the results. And the same goes for like buying inverse ETFs. When it's obvious that you want to buy the inverse ETFs, it's probably around the time you should be selling the inverse ETFs. So if you like to hedge, you're buying the SQQQ. It goes from 26 to 36 this morning. Everybody's all nervous, bearish, another bad day. It's too late. It's too late for this medium, short to medium term cycle. Let it do its thing. And then if you think it's a short, then you can put it on. So my 2 cents on that. So I think I did mention, but so I don't know what to make of these. They're acting so good. That weekly chart is so strong. It's extended, and normally I would be out, but I'm not because I'm trying to give this one more room. Futu. This looks like, I don't know if they see it as a cup with handle. They see it as a cup because it snuck its head out there. But to me, this is a cup with handle. And you could draw some kind of trend line like that if you're interested in that. And other Chinese stocks, obviously. So you have to decide for yourself. And maybe you don't want to own Chinese stocks. I don't blame anybody for that. I think all stocks are risky. So maybe these have a little bit more risk than other stocks. And I'm open to that idea. But geopolitically, I wouldn't want to own NVIDIA. Where all their chips are made if there was a problem. So I think all stocks are going to get are risky. I guess it's true. Some are more risky than others. I definitely get that. Here's like a ETF that I did that wrong. MCHI. So maybe if you want, I mean, it's going to have BABA. It's going to have all those. So to me, it's all one trade. 10 cent is not going to go up while BABA goes down or vice versa. But if you feel a little bit more comfortable in an ETF, it looks pretty strong. Cup with handle, 94 RS. Look at the weekly. Long-term cup with handle. And it's come down a lot. So you're in the middle of what could be. Like this is very like Stan Weinstein-like the stages, right? The very beginning stages of a bull market, possibly. I don't know, but I am bulled up on it. But if they break and they hit my stops, then I'm going to be forced to get out and end of story. So that's the way I treat them. I don't mind giving them more room if I'm up on them, In other words, I might not want to take the profits that I want. Oh, and I forgot to turn my camera off. Sorry. Hopefully you guys saw those charts. I'm not doing this video again. It's too long-winded. All right, let me wrap this up. What else is out there that I would think you would want to browse? So it's just the way they're coming down to the 50-day is unusual. It's the wrong type of action. So it's just maybe it's a leader, and we'll in the next cycle up 3 months, 6 months, 9 months, whenever that is, this will be a name. It's possible. It's very interesting. They talked about this one on IB Live as well. IBKR. So IBKR holding up pretty well. Looks a little bit better than Hood. Not as dynamic as Hood. I think one of the reasons I run to something like Hood is because if you get it right, it moves a lot. So it's kind of my style, the personality of the way I trade. All right, I'm gonna move on to the quote of the week. And I was listening to a podcast, and the guy was talking about Paul Tudor Jones' annual letter in 1994, long ways away. And he was talking about the beginning of the year, and in the letter, Paul Tudor Jones says, the key to putting together a good year is to never fall behind early in the year. 150% agree with this. This is how I start myself every year. I start from scratch. I don't care if I made 100% one year or 2% or lost 20%. I'm back at zero, and I want to gradually, slowly try to build a cushion. It's so critical to be disciplined, patient, and precise in the early going. So and the way you do this is you downsize your position sizing. Maybe you're not fully invested. So instead of being 100% invested, you're 20, 30, 40% invested. I usually do that. I have a hard time downsizing the positions. Normally, I like to have a position. If the stock's going well, it's hard for me psychologically. It's like, I want to have more of that. But I might only have 3 positions. So it might be 15%, 15%, 15%, or 15, 15, 10. And therefore, I'm 40% invested. And I'll just leave the rest in cash. So even though I'm pressing with 3 names, I'm only 40% invested. So let's say the market gets hit and I lose 5% on that 40% invested. I'm down, if I did the math right, 2.5% or 2% or something like that. And then, okay, back to zero. And now I got to try to get out of that 2% hole if that happened at the beginning. So similarly, it's just as important to press early profits into much more highly leveraged bets, because that's the only possible way of having a home run year. Another great statement. So psychologically, and I live it, the start of the year for me has been unbelievable. The moves that I've had in a couple of these stocks and the positions has made a big difference. So my instinct, like if I was running a hedge fund, my instinct might be, let's just go to cash. Let's make 5% on the rest of the money for the rest of the year and have a fantastic year. It'll look really good. But how do I know that this isn't I don't have the chance to have a home run year, like a 50, 60, 80% year or something like that. And the only way to do that is you got to be willing to press with the money you've made. Once you make some money, then you can be more aggressive. I think Mark Minervini calls it, I'm going to butcher this, incremental. Does he use the word incremental? But listen to Mark talk about it. And we'll have Mark on a webinar in a couple of weeks too. But basically incremental. If your account's increasing, your position sizes are getting larger. If your account's decreasing, your position sizes are getting smaller. So once you get up 25, 30, 40, 50%, it's kind of like Bill's adage, like how does a stock go from 50 to 100? It goes through 51, 52, 53, all the way. And that's kind of the same thing in your account. How do you go from up 50 or 25% up 50%, let's say. Well, you got to go up, you got to be up 25, and you got to be willing to risk it to go up 26 and then 28 and then 33. And you got to fight that urge to just spike the football completely. Maybe you can take a little bit off here and there, but you don't want to spike the football completely and then just say, oh, I'm up 33. That's it, because you don't know. Maybe you could be up 50. So what I'll do though is I always have kind of a line in the sand. So let's say I'm up 25. I might say, okay, I don't want to go past up 19 or something. So if somehow my account pulled back to only plus 19 for the year, I would cut everything and reevaluate. I get up 33, I might use 25. I get up 60, I might use 50. So kind of the same way you would a stock. How do you have a stock go from 50 to 200? You're always raising your stops, following it, but not too closely. You got to give it room to breathe. That's kind of the same thing you want to do with kind of your P&L year to date. At least I think so. And I didn't make this up. Paul Tudor Jones said it in 1994, and Michael Platt, read Hedge Fund Market Wizards. He gives people money, and the guy, another billionaire hedge fund, this is how he does it. So I'm not trying to reinvent the wheel. Almost 95% of what I do is like, I just take, oh, I really like what Bill said about that. I like what, and then when I always go to the seminars, that what David said, that makes sense to me. I can do that. I believe in that process. You have to kind of have a bit of belief to follow it when the rubber hits the road. And so I just take little pieces of what these people say and try to apply it as best I can within the framework of my emotional ability to do so, which is very key. So I appreciate you guys. I know this was really long. I just not doing one last week, and there was a handful of wordy sessions in there. So I appreciate you bearing with me. But 800-831-2525, MarketSurge at investors.com. Have a great weekend, everybody, and we will see you next week. Bye-bye.